Funderbeam, which is the next speaker up here, is a global platform for investors to sell and buy equity shares for private companies. And Nicholas Vandrey will be talking about the future of investments, because it's clear that changes are happening and there are opportunities that can be utilized.
All right, thank you very much. Can everybody hear me? I'll take that as yes, fantastic. All right, my name is Nick Vandrey, and I'm the head of data at a Estonian-based startup called Funderbeam. And today I'm going to talk to you a little bit about how we're using two emerging technologies, big data and blockchain, to disrupt early stage investment and hopefully shape the future of early stage investing. So to begin with, let's cover what the problem we're currently facing is with early stage investing, and there's two sides to it. First, from the investor side, is you are very much limited to investing into companies and opportunities that are within your region. Unless you're a big name VC or a super angel, you're really not going to get a lot of deal flow outside of from where you're located. And once you do put your investments into a company, you're often stuck in that investment for 5, 10, or even longer years. And this can be particularly relevant for angel investors who don't have an abundance of capital to make several investments. From the entrepreneurial side, if you've created a product, you've created a company, and you don't manage to raise capital from the investors in your region, you only have a couple options. You can try and bootstrap, which most of the time probably isn't going to work out too well, or you can move your company to somewhere where there's an abundance of capital, like the Valley. You can go to Berlin, you can go to London, but this also comes with a lot of its own issues, and it's very time-consuming and expensive and difficult to uproot your life for the purpose of your company. So what Funderbeam has done is devised a platform that tries to tear down these problems and these borders by creating a cross-border platform that allows investors to invest in companies all over the globe, and not only that, but trade their early stage investments. And I'm going to go over exactly how we do that over here real shortly. So we like to say that if Bloomberg, NASDAQ, and AngelList had a baby, it would look a lot like Funderbeam. And by that we mean we've built our solution on 3 pillars. The first is a research platform, which is what I'm personally responsible for, where investors can come and do their discovery and do their due diligence and try to understand and gauge companies' position in markets. The second component is the fundraising platform, where companies can come and raise funds from investors all over the world. And then we have the secondary market, where we have the investments listed, where you can buy and sell early stage tokens. So I'm going to start with the data platform a little bit, because that is what I work on. And you have a couple components here. First, you start with raw facts about individual companies, where they're located, who their team members are, what it is they're doing, when they were founded. And once you have this information, you can start to build it into understanding markets by region, by industry. And once you have that, you can start to do really cool things with it. You can go and try and benchmark and draw out competitive landscapes. You can try and derive what companies need to be raising funds. And you can use this information and provide that information to investors so they can make informed investment decisions. But the first step to doing that is actually acquiring the data. And in order to do that, we've built a system that's more or less outlined behind me here. And what we do is we collect information from as many publicly available sources as we feasibly can. And we have structured sources, such as Twitter APIs and Facebook's APIs, where we can go and look at that profile, see how many Twitter followers they have, see where they're located, see how often do they post on Facebook. But the real valuable information is usually in media. And in order to analyze that, we actually need to go and collect articles and collect free text and extract information from it. So in order to do that, we've trained several natural language processing algorithms called grammars in an event parser. And we're looking for events that are particularly relevant to how companies develop. So these are things like funding rounds, IPOs, acquisitions, relationships. Who are the people making the decisions of the company? Who's the CEO? Who's on the board of directors? And we have all these models scanning millions of articles a day looking for this information. And when we pick up on something, we match it to entities in our database. So if we have a company that raises funds, we match it to that company, parse out the investors, and run everything through an anomaly detection system, which more or less tells us at a statistical level how confident we are that this event actually happened. And there's a very specific reason we do this, which is when we launched the initial version of the system in our testing environment, we jumped up from having about $400 billion worth of global funding information to about $22 trillion worth of global funding information overnight, which sounded fantastic, but also sounded a little bit suspicious, so we dug into it, and it turns out we'd picked up on an article about the US national debt at $21 trillion and parsed that as a funding round. And as far as the machines were concerned, this was just the largest funding round to ever happen in human history. Wasn't actually true. That was a false positive. So now we have these detection systems in place to say, okay, that looks a little suspicious. We cluster all of this together so that when we have several sources indicating the same event, so we've got a TechCrunch article talking about a funding round, and somebody tweeted about it, and somebody posted about it on Facebook, we can see, the more sources we have pointing towards an event, the more confident we are it happened. And then we put all this information into our back office where our data analysts can go and verify it or throw out the stuff that's not true, or make sure what we put on our website is as accurate as it can feasibly be. And once you have this information, you can do really cool things with it. You can map out competitive landscapes. We use a neural network to assign companies to industries based on their textual descriptions and feed this information and publish quarterly reports about global funding so that investors can come to our platform and understand these markets and understand what the current environment is like. So now you've got the data, you've got your spare cash, you want to invest, and that takes us to the second technology we're using, which is blockchain. How many of you have heard of blockchain? How many of you are working with blockchain? How many of you have thought about working with blockchain? All right. Blockchain is a very interesting phenomenon, and the reason that is because everybody has heard about it, everybody is talking about it, and virtually nobody understands what is actually going on. And the confusion here really stems from kind of the technology versus use aspect here. From a technological standpoint, blockchain is very, very complicated, but very, very useful, but that's not really what adds value. The reason that we like to use blockchain is it adds an additional layer of decentralization and trust, which is kind of a very crucial component to having any sort of secondary market, is you want to be able to trust the parties who are conducting both sides of the transaction, the buy and sell component, but you also want to be able to trust the operator who's actually handling the transaction. And that's what the real value is here for us, is using that trust aspect. So how do we use the blockchain? First, a company comes to us and they want to raise funds. We put together a campaign. You and a few hundred of your closest and richest friends pool your money together and put it into the company. And what actually happens behind the scenes is that money is pulled together and put into either a nominee structure or an SPV. And this SPV is added to the company's cap table. It actually conducts the investment. And what you receive as a backer are digital tokens called colored coins. And these digital tokens are actually metadata that's embedded on top of the Bitcoin blockchain. And what they represent is the underlying asset that you've just invested in. It can be equity, it can be a bond, it can be a convertible. We've had a fund raised on the platform. And since we can compress this data, we can see what syndicate or what company is this token related to, what equity or what asset does it represent, what were the terms of the deal, and we can actually trade and transact these tokens on the blockchain. And since we can validate and verify these transactions on the blockchain, you can create a liquid secondary market. So once you've actually invested, you've received your tokens, you can trade them within that investment pool. You can trade them to people who missed out on the primary round, or you can even tokenize assets that didn't necessarily come through the primary market on our platform. And what this means for investors is if you're, for example, an angel investor and you only have enough capital to put into 1 or 2 companies, you don't really want to be out of that network for the next 10, 12 years. So you can actually sell all or part of your investment early on and make a partial exit early, free up some capital to conduct additional deals. And you don't have that lag between when you're investing and when you're actually back on the market. It also means if you missed out on the primary round, but it's a really interesting company and it's showing very strong growth figures and you believe in what it's doing, you don't have to wait until the next fundraising event. You can actually buy these tokens on a secondary market and get in after the round actually took place. So here we've just got a couple images of what our trading floor looks like. You've got the buy and sell side, and this is real data. This is a fundraising round we did for our own company a few years ago. And what we've seen is trading activity has been quite consistent throughout the entire time we've introduced it to the platform. And what's really cool is we've seen these prices react to significant events. So I don't know if I have a pointer here. I do have a pointer here. So you can see there was this spike here. And that actually occurred over the course of a few days when we announced a new strategic investor. The token price went up significantly for a little while. It leveled out a little bit, but it reacted in real time to that news. So that was a really good example of showing how these token prices are influenced by real-time events. And the way it works behind the scenes is you've got two parties. You've got a buy side and a sell side. Somebody wants to buy tokens and sell tokens, and you sign the order. You agree you want to conduct the transaction. That's recorded on the blockchain, and once we receive the confirmation, we settle the trade. And the real-world effect this has can be seen if you compare it to stock markets. So currently, if you want to invest in stocks, there's several middlemen. You've got your bank, you've got your broker, you've got the central depository. And this was all very necessary when these systems were put in place. But in the age of technology and blockchain, this isn't really the way things should be anymore, but you should have consistent access directly to these platforms. So using the Funderbeam platform, it looks more like this, where we connect the investors directly to the companies and merely operate as the exchange, cutting out the rest of these middlemen, making a much more intuitive and modern system. And just some key statistics about our platform. We've currently had over 8 million euros raised in primary transactions and had over 2,000 trades settled on the platform at about 10% of the total raised value. And we have investors on our platform from 111 countries, really making it a truly global cross-border platform. That's all from me. We do have a booth outside. I'm here with two of my colleagues who are all wearing shirts exactly like mine. If you have any questions, please feel free to come and find one of us. We'll be happy to answer them. Thank you very much.